Tesla just announced a stock split. Here's why this is good news and, well, maybe also why it's irrelevant. But just to recap, on Twitter earlier today, Tesla mentioned that Tesla will be asking shareholders to vote at this year's annual meeting to authorize additional shares in order to enable a stock split. A stock split is basically when, let's say you have one share of a stock and now that becomes 5 shares of that stock. Well, accordingly, the price of that stock reduces by a fifth. So it doesn't fundamentally change the value of your holdings of that stock because now you have 5 times as many stocks, but they're worth 5 times less. But effectively, it increases liquidity because now you can buy and sell these stocks at a much lower price point. For example, let's say you have an Apple stock worth $100. So you have one stock of Apple for $100, and now there's a 5-for-1 stock split. As a result, you will now have 5 shares of Apple, but they will be worth $20 each instead of $100. So before you had $100 worth of Apple stock, and now you still have $100 worth of Apple stock. The only difference is that before you had 1 share, now you have 5 shares. Now, the last time Tesla announced a stock split was back in August of 2020 when they had a 5-for-1 split. Over a 3-week run following the announcement, the Tesla stock rose 80% from when the announcement was actually made up until the point the actual split occurred. That's crazy. Now, this is good for investors, for one, because it gives them the sense that management is very optimistic about the company's fundamentals. And we've also seen similar runs happen with tech stocks such as Google, who after a stock split in February, the stock rose 7.5%. Stock splits also allow people with less capital to own a share of a company. As an example, they can now buy Tesla at $200 as opposed to $1,000. By the way, if you have made it this far, consider subscribing to the channel for more content like this. So again, it reduces the price of a stock, which can seem pretty high, but it also increases liquidity. But wait, this isn't necessarily good news because that doesn't really change anything since we have fractional shares now. So in theory, you could actually buy $1 worth of Tesla if you wanted to. I actually have a video right here on how you can buy fractional shares of any stock using a brokerage account such as Fidelity. Now for some not so good thoughts. So most recently, Amazon announced a 20-for-1 stock split recently, just in the same month, and as a result, the stock has recovered 16%. Notice I said recovered, not ran up. This is because Amazon stock was trading higher in prior months, but the high PE multiples theme seems to have run out as we see most of the tech sector and even the overall market suffer a correction. Also, fundamentally, nothing really changes with a stock split. The fundamentals don't change, the market cap of the company doesn't change. In addition, Tesla's Shanghai plant is actually going to be shut down for a few days due to lockdown restrictions, and this could potentially lead to jeopardizing a few thousand vehicles from being delivered. Wall Street, by the way, does expect Tesla to deliver between 310,000 and 320,000 vehicles within the first quarter of 2022. So we are cutting it very close. Now, given the recent correction and the fact that Tesla did run following this correction for the last 2 weeks, could this mean Tesla doesn't have as much upside in this environment as it did last time? This could certainly be the case, or it could be the perfect catalyst to set Tesla up for another 3-week bull run. I'd love to get your thoughts and your perspective on what you guys think, so be sure to leave a comment down below. Thanks for watching.